the aspect today, and this is because I received an advertisement on WhatsApp just a short while back from a leading bank tied up with a payments service provider, and I found out that a lot of frontline banks are actually offering this service. It is a loan on a credit card, and the amount that was offered was up to 5 lakh rupees. The interest that was chargeable was 1.25% per month. And I've been told that this is actually on the lower end of the spectrum. People actually charge more than that. So instead of swiping your credit card, what is happening is that you are receiving these funds in your bank account. I was quite stunned when I heard it. Santosh, maybe I'm behind the times.
Yes, you are, because there are many banks offering the services through fintech platforms, and there are many even fintech platforms that offer these, what we call the instant personal loan or the instant money in your bank account. And sometimes, you know, there was also this thing called early salary, or discount your salary and get money into your bank account. There were two problems with that. Number one, it was easily available. Number two, people were not able to fathom what was the actual cost. Because now when I tell you it's available at 1.25% interest PM, you don't know that's per month. And 1.25 seems to be okay in today's context, because there are guys who lend at 3% or 3.3% per month, because credit cards are at that rate. Now, whether it's a credit card or a personal loan, they're dispensing quick loans to you. In a credit card, they give you a piece of plastic and say, you go use it when you want.
Swipe it, yeah.
So then the lender is a lot more comfortable, because you're not going to blow the whole money one go, and you're actually using it to buy something, and it kind of circulates the economy. But when they give the money to you, now we do not know, and we do not know what you're doing. And a lot of youngsters who are very experimentative with apps and mobile technology, they find this too tempting. I mean, what could go wrong if I, press these 2-3 buttons and the money comes into the bank account?
Mathematically, why don't you take us through it? Because, and I know that you're numerically very, very strong. So 1 lakh rupees, how can that balloon out of proportion if you are to take something like this?
See, in a credit card, when you have a lakh of rupees spent, all that the credit card asks you is a minimum 500, 1,000 or 5%. But what you don't know is the interest is charged from the day you actually swipe the card. And then what will happen is suddenly you'll realize that 3% per month translates to 36% per annum. Right? On a lakh of rupees per annum, it's 36,000. And for some reason, you're only paying the minimum due. That's when it starts ballooning. Even though you're paying that minimum due or slightly more than minimum due, you're actually, like the power of compounding works even in debt, and you pay for it.
And here you're talking about 36%.
Yes, and it's ridiculous. And at 36%, in about 2.5 years, you double your liability.
Just 2 years, yeah. 72.
I mean, less than 2.5 years. You really literally double your liability. The other thing is that because it's so easily available, and in our mind, we are not able to differentiate between the things near and the things far, we think it's always easy to pay into the future. And there are some people, and I'm sure most of us will come across them, they just don't take one loan. Because available, they take 2, 3, 4. And they get into a very vicious cycle, and it puts them back in their careers in their life by 3, 5, 10 years, because now they're not talking about progressing in finances or their career. They're trying to come out of debt.
So it's a debt spiral. So long story short, it's a horrible idea to get into something like this.
For most cases, it's a horrible idea. For very few people, where they do really good quality work, maybe this is a little bit of a lever that they needed, and especially if you borrow prudently. Now, borrowing is not a bad idea. So let me just break that down. The difference between borrowing, right, and leverage is when you borrow, you're spending it on discretionary depreciating assets. Right? But when you're borrowing as a loan, you use for equipment, or you use for services, or you get
to buy a house.
You're using that to up your game and to be more skillful or to be more resourceful. In one, you're using it as capital. In the other, you're just blowing it away.
So for most people, I'm thinking we're talking about 99%.
They are just borrowing.
Yeah, who should not do this. Okay, so that was the point that I absolutely wanted to communicate.
The point you should not do it is because it's just not the money that you borrowed. The bill comes later, which is the interest. You've borrowed a lakh. You're going to pay, if you delay it for 2 or 3 years, you're going to pay back 2 lakhs. That is, you doubled what you've borrowed.
Yeah, and you get stuck doing that. Santosh, thanks so much for taking the time. Pleasure speaking with you.
Thank you, Alex.
That brings us to the end of this edition of Your Money Matters. Do stay tuned, lots more coming up on NDTV Profit.